Hey y'all, this is Becky Maynard with Keller Williams Realty LRGV, and today I've brought in my friend Corina Becker from Gold Services Financial to talk with us about the lending side of things. Hey Corina, how are you?
Hi, I'm good. How are you?
Very well, thank you.
So I wanted to talk a little bit about mortgage myths. Now, a lot of people are, when they come to me, they're kind of afraid to apply. They don't know a lot of the details as to what it takes to get pre-qualified. So I wanted to go over a pre-qualification process. So a pre-qualification is basically an approval on your credit and I get to tell you what your buying power is, how much you qualify for, what your payments would be, an estimated down payment, and what you would need to bring to the table. The interest rate that I quote is also what we call a floating rate. So until you actually find the home and you come back and do the actual application, that's when we can lock your rate in, and whatever rate I quote you, it won't change. Right? I do fixed rate loans. Obviously, we can do even variable rate loans, but for the most part, we do fixed rate loans.
So Corina, one of the most popular questions I get when people start the house hunting process is, what is my down payment on this house? Can you explain to them what a down payment is and how that's determined?
Yes, so a lot of people believe that you have to have 20% down in order to purchase a house. In some cases, on a conventional loan, if you put 20% down, you can avoid paying mortgage insurance. But to be very honest with you, we have first-time home buyer programs where you can come in with as little as 3% down. We can do an FHA loan with as little as 3.5% down. And there's also some down payment assistance programs that we help out our clients with. They're state driven, and those are actually, they pay for your down payment. So that's, it's really affordable to get into a home loan right now.
So what does that look like, that 3.5%? For example, if they're looking at homes for around $100,000, what's that number?
Well, one of the most popular loans that we're doing these days is an FHA loan, and that's 3.5%. So for example, a $100,000 loan, 3.5% is $3,500 down payment. That's it. And if you go a little higher, $150,000, your down payment's $5,250. So you can get into a home.
Wow, that's great. Is that all that they'll have to come up with? So that's the money that they would need to be able to get into a home, or are there other costs?
There's additional fees. We have what we call our closing costs. Closing costs are the actual fees for the loan plus prepaids, or escrow is what we call it. And we usually tally that up, add it to the down payment, and that's what you need to bring in. However, there's different programs where we can help you with the down payment. You just have to come in with the closing costs, or we can, see what we can do about getting seller concessions, and then that would help you with the closing part, and you just have to come in with the down payment.
That's a great point. And as your agent, I would be the one to help you with getting those seller concessions and having the sellers help you out with those costs that are involved in that. So Corina, knowing that, does that mean that if my buyer has $10,000 saved up in the bank that they can qualify for your loans?
Well, it's great that they have $10,000 in the bank, but there is several other aspects to getting pre-qualified for a home loan. So obviously we have to do a credit check, and you can have great credit, but there's several pieces to the pie to get pre-qualified. We have the credit score that'll help me decide which program I can actually fit you into. We have to look at your assets to see if you have enough funds in the bank to prove to an underwriter that you have your down payment. We also look at debt to income. So we calculate what the debts are that they have. We also add what the potential payment would be, so I can look up to see how much home you can afford. And so that's a debt to income. We look at the income that's coming into the household as well. And another piece of the pie is employment. So you'd really need to have at least 2 years history of employment, and of course 1 month in your current job. And so there's several pieces in order to get pre-qualified. Sometimes I get clients that say, well, I have such great credit, why didn't I qualify? Normally it's because of the debt to income. but we can always we can put a plan together to see what they need to do to qualify for the amount of home that they want. Or I tell them, well, you're qualified, but for a lesser amount. So that's normally how we put a qualification together.
So debt to income, that's per se if my income is $5,000 a month, but if you add my car payment, my rents, and my cell phone bill, and maybe those credit cards that I have charged up, and what those payments are, that's what the debt to income is?
It's the debt to income, it's whatever monthly payments that you have or that you owe to creditors, actually. So we will take your car payment, we will take your credit card payments, not necessarily your cell phone, and then actually we'll add up what the potential house payment is going to be. So we add that together, and then we actually calculate what your income is, and then we can tell you if you qualify based on that, for that house purchase.
So percentage-wise, what is the debt to income ratio that is ideal?
Well, the ideal is 45%, but FHA is a little bit more lenient when it comes to that. Our company, we can close loans with a debt to income ratio of up to 56%. There's some programs that don't allow it. Excuse me, for example, the down payment assistance program doesn't allow you to go up that high, but that's the ideal.
So that's, in other words, saying that if my income per month is $5,000 and I have $2,500 worth of payments I'm making every month,
You can
then
still
I can
qualify.
still qualify.
You can still qualify, yes, with 50%.
Fantastic. Now, my husband does pay child support. Is that going to be factored into those
Yes.
numbers?
Child support and alimony payments that you owe is factored in. And on the other hand, if you have a full-time job and you receive child support or alimony, we can actually use that as income as well.
Wow, that's great. Thank you. So, Corina, another big thing that people are always worried about, and probably rightfully so, is our credit scores. What can you help us understand better about our credit scores, more than just Credit Karma and seeing what those numbers are? What do they mean to us when it comes to a home loan?
Well, credit is a big part of that piece of pie and for you to qualify for a home. And credit is probably the number one reason why people are afraid to apply. And they think that the credit score is going to be affected by pulling a hard pull is what we call it. So one of the myths is that your score is going to go down when you pull your mortgage credit. In all honesty, it's not supposed to go down, and your credit is kind of frozen for about 30 days after you apply, and that's set up for the consumer so that they can shop around for their mortgage. Your credit's not going to drop, and it's the most accurate credit report that you can pull. So there's several out there. There's Credit Karma. There's the FICO scores that you all hear about, and those are great and all, but those are what we call the consumer reports. For a mortgage, we actually pull from 3 credit bureaus: TransUnion, Equifax, and Experian. And then we choose the middle score of the 3. That's the one that we use to qualify you in. So we actually Goal Financial. Just so you know, the lowest score that we use is a 500. That does require 10% down, and there's other restrictions and requirements in order to be qualified if you have a low score between 500 and 580. We can do regular FHA with a 580 credit score. That's 3.5% down. And obviously the higher the score, you can actually get a better interest rate the higher the score that you have.
Very nice. And tell me, what is the best credit score as far as interest rates? If I have a 700, am I going to be getting the best interest rates, or should I try even harder to go?
You'll get a fantastic interest rate in the 700s. I've seen 720s up to 820s get, just the best rates that are out there. You don't have to try any harder than that, but I usually try to consult some of my clients and just kind of go over the report with them, find out what on the report is actually theirs. We try to omit anything that's not theirs. I kind of give them some advice what they can do to increase their points. Sometimes they can, as little as just paying down one of their credit cards can actually help them so much to increase the credit so that maybe they can qualify for a better rate or even the program that they're interested in.
So which of the three companies you mentioned, there's Equifax, Experian, and TransUnion, you said?
Yes.
Which one of those is the middle score typically?
Actually, it varies. It varies. Every credit bureau grades you in a certain way where they just kind of throw out what you have on your report and give you a score. So it's not one in particular. It's all three, and then we pick the middle one.
Oh, very good.
And everybody's report is different. I tell people it's like your DNA. It's your history. It tells a story of where you started in credit wise, what your history and repayments are, how long you've had the credits, what your highest balances have been, what your highest limits have been. So it tells a whole story. So it's very different than the consumer report that you get online.
Very good. And do you recommend that we go pulling our own credit scores before we call you, or should we just leave it to a professional?
No. I mean, there is a way you can get a free annual credit report every year, but it's still not as accurate as the mortgage pool. The mortgage pool is a lot more detailed, and you don't have to go pulling it before. You can just call me. You can call me, I'll pull the report.
Well, thank you so much, Corina, for allowing me this time and for sharing this information with me and with my viewers. I hope you all enjoyed this. It has been very informational. If you have any more questions, or if you're interested in finding out more what your money can do for you, give me a call, give Corina a call. You'll find our information here. Like and share this video. I'm sure there's lots of friends and family you have that would also enjoy this information. Thanks so much.
Thank you. Bye.
Thank you for watching. If you enjoyed this video, like and subscribe for more content, and follow my social media pages listed below. If you have any questions or topics you'd like to discuss, message me, comment below, or find me on my social media pages, or call me at 956-990-8088. Becky Mater, it's your move.